Hi guys, Tim Erickson back for another video. This video is going to be dedicated all to explaining margin, the risks and potential benefits of using margin so that you guys can make an educated decision on if you want to try using margin yourself for investing. So breaking it down really simply, margin is essentially the money a brokerage is willing to lend you to invest with. So for those who have been following my channel know I'm doing a challenge where I started with $10,000 on Robinhood. I'm trying to turn it into $100,000 as quickly as I can. I am using margin, but not in the way most people do. I'm using margin just for my options collateral. The most common way of people using margin is just to borrow money to then purchase stocks. And one of the main benefits of this is it can really turbocharge your returns. So just taking a basic example, let's say you had $1,000 cash that you wanted to invest in a stock. If that stock then doubles in value to $2,000, you've made $1,000 profit, right? And the flip side, if it gets cut in half in price, goes down to $500, you've lost $500. But now if you take that same example and take your $1,000 cash and also borrow $1,000 from the broker, so you have $2,000 total, you start off with $2,000 of stock, but your equity value is only $1,000 because $1,000 of it was on margin. Right? Now if the stock doubles in price and goes up, your $2,000 initial stock purchase is worth $4,000. Your margin loan is still only for $1,000, so your equity is now $3,000, the difference between the $4,000 value and $1,000 loan, right? So your $1,000 cash investment has now tripled in value to $3,000 if you were to close out the position. So instead of just doubling, you've tripled your money. It's really helped turbocharge those returns. The same is also true for losses, though. So if you bought $1,000 on cash, $1,000 with a loan, so you have $2,000 initial investment, and the stock price gets cut in half, that $2,000 purchase is now only worth $1,000. But you'll remember we borrowed $1,000 to buy the stock, so we essentially have no equity left because we're now only worth $1,000. We've borrowed $1,000. Our initial $1,000 cash investment is essentially gone. So it also turbocharges your losses. So those are things to be aware of and careful of before you start investing with margin. Now, the other thing to be aware of is when you do borrow money like that, the broker does charge interest, and the amount of interest they charge does vary broker to broker. Robinhood only charges 2.5% interest. They do make you sign up for their Robinhood Gold features to trade on margin, which does cost $5 a month. With that, they do offer $1,000 of margin interest free to kind of help offset the cost of that $5 a month subscription. But I still like to avoid buying stocks on margin just because of the very quick potential to just be wiped out completely on your account. Now, I am using margin a different way. I've been using it as options collateral. So essentially, instead of holding cash to cover my options, the broker is basically saying, my account balance is high enough where if I were to need the cash to cover these options, they would just lend it to me, right? And we can see that here if I come down here to break down my buying power, that I have just under $6,000 of margin available, but I have $5,400 of that being held as collateral against my options. Now, none of that is considered margin used, so if I come over to my account and scroll down to the margin, you see margin used is still zero, which means I still have zero in interest charges. If the event that the options go in the money and they are assigned and then the cash is loaned, then I would start accruing interest. Since I'm on Robinhood, I would only really accrue interest if that balance exceeded $1,000. But again, my goal is to try and get through the challenge without paying a single penny in interest. So this is how I'm using my margin. The other thing to be aware of here is what they call the margin maintenance level. Now this is the level where if your account balance drops below this amount, then you could be subject to a margin call, which is where they forcefully sell your positions in order to protect their margin loans, right, to make sure that they don't lose money on the loan. So it's a real good business to be in if you can get it, right? They basically are able to lend you money and guarantee it gets paid back because as part of their terms of service for lending you the money, you agree that if you drop below the maintenance level, they can forcefully sell your positions. So there are a couple ways to avoid that. If your account balance is dropping and you look like you're getting close to the margin maintenance, you could either deposit more cash into your account to help cover that difference, or you could choose which positions you wanted to sell yourself to help get yourself further away from that maintenance level. But those are the things to just be aware of considering margin. Again, you know, if you are buying stock on loan, you will expect to pay a little interest, and you do have massive potential for gains. I'm electing to go with the other strategy where I'm using it as options collateral. The options trades I'm using is, again, since it's collateral, I'm selling the options. I'm selling mostly put credit spreads, and I've done them all at prices that are all pretty far from the money, so they are all very high probability trades. There's just limited upside in them, but using the margin is just a way that I can really leverage my portfolio. So for those who followed my challenge, you'll be aware that I started with $10,000 and bought an assortment of a few stocks. And then because these stocks are all worth a large chunk of money, the broker would be willing to lend me money in the event I would need it to cover my options. So that's how I'm using margin as my margin collateral, or options collateral. So that is margin in a nutshell. If you guys enjoyed the video, please consider liking the video, leaving a comment below if you have any other questions, and subscribing to the channel so you get all the future updates. But I look forward to following up with you guys next time, and hopefully getting this challenge off and running. Thanks.